And we're live. There you go. Hey, folks, welcome back to Soaring Prophets. As always, you have the dynamic duo here. And we got a lot to talk about this week that's kind of went by here. We just had Canada Day for our Canadian folks that have been around. Yeah, so we were celebrating that. And a lot of other kind of things have happened around. So a little bit of a market catch up. China is really in a tough position right now. We've got a lot of problems going on in China. This is something that I'd kind of talked about kind of briefly before. We're having banks that are just seizing assets of people, closing down and shutting down accounts. There's one individual that I'm hoping to bring it up here. I think I got it here, but one individual had $6 million in three separate small to mid-sized Chinese banks, and it's gone. They've frozen his accounts. He's unable to pull that asset out. And this is something that, like, us here in the West, we'd have to go back to like the Great Depression of when,
a
long time.
Yeah, in the Depression, they talk about how people like went in droves to take out their money. That's kind of what the It's a Wonderful Life is kind of based on.
Right, exactly. That's I was going to bring that up for people that don't really know what a bank run is.
Yeah, that's basically it, is that people lose faith in a bank, and they go and they remove all their money, and they remove it en masse, which is very harmful to banks because they don't have all that money sitting in their tellers. They're using that money. It's all invested. Other people buy houses with it, all that stuff. And it gets scary for them.
Right. So this is even crazier than that. So during, like, in the time of It's a Wonderful Life, the banking methodology that we used back then was what was called the gold standard. So if you had $1 worth of gold, they had the gold in the bank to make that work. So now we've gone away from that. So under Richard Nixon as a president in 1972, I believe, we left the gold standard. So what that created was a fiat currency. So our dollar is not backed up by anything. Okay. Nothing. So they can keep printing and printing and printing and printing.
It's backed up by debt.
Yeah, the bond market.
Right? That's what it's backed up by. It's backed up by debt. It's a very unusual situation because they could literally just print more money right now, increase the debt, and our dollar is actually a negative marker.
Right.
God. But
so for every dollar that is printed, there is a debt that is owed to that. So for $1, we owe, as taxpayers, as citizens, we owe the Federal Reserve, whether it's the United States or the Bank of Canada or the Bank of England or the Bank of wherever you want to be, these federal banks, we owe them an interest rate on that. So in China right now, they've had a problem with their housing market. Their housing market is crashing. And this is based on one of the largest problems that was there is this company called Evergrande. And Evergrande is this massive housing builder that has, since about last November, have been defaulting on their debts. And defaulting means that they can't pay their debt anymore.
Right.
And it's to the tune of like $300 billion. Like that is what kind of crushed the American housing market in 2008, a $300 billion housing shortfall. That's one company in China.
Right.
Yes. So what we're seeing right now is we're seeing a fallout in China, which nobody's talking about, right?
No.
We're also at this weird tipping point too, where they're continuing to push a zero COVID policy in China. So when you have a zero COVID policy, what that means is that if they have a single case, they shut down the whole community.
Right.
Could you imagine?
No.
Right.
Everyone has to go to their homes and be locked in. Businesses shut down.
Yeah. Well, so what is China to us? Like, China to us is our manufacturing hub, right?
Yeah.
Well, okay. So if you have a case of COVID in a 1.5 billion population country, theoretically, and this is where it kind of gets into some of the nitty gritty of this. Theoretically, you would hope that, that China would kind of burn through all the cases of COVID. They would come out the other side and away we go, right? So we in the West, we had vaccines, developed by Pfizer, whatever your take is on the vaccine processes, but they worked. They had some resiliency to the COVID-19. The Chinese one doesn't. So what this does is this leads us down this path of.
So you're saying the Chinese used a different vaccine, and
Correct.
that vaccine had no teeth, that like it didn't affect the COVID at all.
So it didn't even affect the first strand of COVID, so the alpha, right? So now we're on to beta, delta. What was the last? Omicron, BA plus. Like we're like 8 or 9 derivatives of this later, right?
Yeah.
And their vaccine didn't work on the first one. So what we're looking at potentially, and this is where I kind of got, it's been kind of a scary couple months here because the world is literally shifting underneath us. And like I said before, is I'm not usually the Chicken Little type guy, but this is kind of why I get a little Chicken Little.
I'm going to tell you right now, the last month you've been the Chicken Little kind of guy.
100%. So
you don't get to say that anymore.
No, I know, and that's the hard part because I'm seeing this all come down the pipe. So like what I'm saying is that if China, the manufacturing hub of the world right now, if they lock everything down, they're not the manufacturing hub of the world anymore.
No.
Where do you get your stuff? Right?
Yeah.
So if they can't control the first COVID derivative, how are they going to control the next 7? And Omicron, like I think everyone here has had somebody in their household that had Omicron.
Oh, yeah.
I did. You know what I mean? Like everyone had Omicron. Yeah. It was the most contagious viral outbreak that we've had, I think, ever.
Yeah.
That hasn't hit China yet.
No. But
so how are they going to do a zero COVID policy?
It wasn't as harsh as the original COVIDs.
But if their policy remains zero.
If their policy remains zero and Omicron would trigger a COVID response on a test, then you're right. Then it would shut down factories. And we do not have the infrastructure, nor with unions and pay structures, which I think are valid. We should have those. Yeah. I'm not saying they aren't. But in China, you know, Adidas can make a shoe way cheaper than if we all of a sudden built a factory in
Alabama,
wherever. Yeah. It would be, you're talking about price increases that I don't know that we could handle.
So this is what I'm wondering is right now. So we're going through a phase of inflation. I think everyone would agree that we're seeing price of goods going up rapidly, right?
Even Biden says that.
Yeah. Yeah. Even Biden.
I know you love him.
Oh man, he's brilliant. Like whenever Biden talks, I listen. Yeah. But I think what we're doing right now is we're seeing a lot of inflationary costs because manufacturing sectors are relocating.
Right.
They're pulling out and they're seeing that China is a very difficult entity to do business with now. And the companies that aren't are going to be way behind. And the more and more I look at this, I look at areas of like northern Mexico. And I think that there's going to be real opportunities for manufacturing there under NAFTA. So NAFTA is the North American Free Trade Agreement that Canada, United States, and Mexico signed years ago under Brian Mulroney and Clinton, was it? I think it was Clinton.
I think so.
And then I think it was Vicente Fox was the Mexican.
And then Trump just
re-upped, right? Because I think that was Trump's plan, is that I think Trump had some foresight into realizing that China is a bit of a paper tiger right now. Is that everyone's worried about China, they're coming to eat our breakfast, right? And I'm very concerned that they're not going to be able to feed a third of their people in the next.
I have seen a lot of things. Like I remember probably 10, 20 years ago, economists were talking about how China was a very serious concern. We should be worried about them. They own a lot of our debt. And, you know, realistically, they could take over a lot of the world. But all of a sudden now, the economists and the people in the know are saying that China is not a factor anymore, that they're just going to be trying to survive.
Yeah.
Which is an interesting flip.
Yeah. Well, see, and that's the issue. So China did 200 years of economic development in 20 years.
Yeah.
Right? Like from the 80s to today. So let's call that 30 plus years, right?
Right.
So in 30 plus years, they went from agrarian society, so literally rice paddy subsistence living,
right,
to where we are now under Xi Jinping, who everything that I read, everything that even comes out of China is that he is a single-handed dictatorial leader. Okay. And what I mean by that is that, so if you go back in like even if you go back to Mao's China, so Mao Zedong, the original communist founder of China, if you will, he ruled with an iron fist, and there was problems around people not willing to bring him bad news
Right.
because they were concerned that, okay, well, it's off with your head, you know,
Right.
shoot the messenger, if you will, right?
Sure. Yeah.
And
Yeah.
I would argue that we are in a worse scenario right now with Xi Jinping, where he's going, no, I'm not hearing that. Tell me things I want to hear or bring me solutions.
Hmm.
And this COVID policy, a zero COVID policy, will be devastating to China.
A zero COVID policy would be devastating to anyone. Like we did it. We lived through it, and we had to have the government pay people just to survive, right?
Yeah.
Well, it wasn't zero tolerance. I guess it wasn't zero tolerance because there were still people out doing things. Yeah. So it's not quite the same. It would be, I couldn't even imagine. I don't know how you'd function if, like, because I was still out working. You were still out working. There were a bunch of people that were still like making the important wheels turn, right? The oil. But if you like, what if all the truckers, like we have communities in our Ontario that the whole community is our trucking community. Like a lot of people who live there live in that community. So if you shut them down, zero policy, our trucks don't move, right? Trucking is a skill.
Yeah.
Not hopping in a truck. You're not hopping in a truck to deliver goods. I don't think. Not today. But there's other communities. Like there's like, if you even look in our little city, there's sections of our city that like people who have similar professions live. And so if you shut down those, you're shutting down a whole system. And yeah, anyway, I don't know. It's just what popped in my head.
No, yeah. And I you know, it's funny because I think that what we're seeing right now, and one of the things that's been kind of holding up my kind of hopes that the economy isn't set for, like, we're in a recession, folks. Like I've been saying this for a long time.
Yes.
That we're in a recession right now. Whether we get the numbers here this week or not, we're in a recession. You can't look around and not go, holy shit, people are cutting back everywhere, right? It's gonna take some time for the numbers to hit, but we are there. And the only thing that's kind of held my hope up that we're not going to end up in a massive hole, a massive recession, or even like a depression, which is, these are all statistical things, right? A recession is 2 negative quarters of GDP.
Right.
That's considered a paper recession.
Yeah.
And we're there now. Like there's not a family I know that isn't cutting costs somewhere in their daily life. Like it's not a thing. So to say that we're not there is idiotic. But the thing that had been holding up hope for me is the employment numbers.
Right.
Then you hear from the tech sector. So you hear about Zuckerberg, you hear about Elon Musk, you hear about Google.
Right.
They're canceling contracts.
They are, and laying off people.
And laying off hundreds and hundreds of people. And I hate to say it, but these are the people that are the canary in the coal mine, because they are literally watching what everyone is saying.
Well, also they're the ones that are making the billions of dollars and have made those billions of dollars because they've seen the wind and been able to judge the storms. And like there's been other storms before this one that they just knew how to sail it, right? And now they're sailing it by what you've been suggesting for the last month. Stop spending, start cutting where you can cut, and start like thinking about the future, getting into cash and being prepared for what's next. And it sounds like those tech companies are doing just that. Exactly. They're looking at the fat, because there's always fat in companies that you can live without, and they're doing that, right?
Yeah. Now, the issue that comes with me for that is that that's the beginning, right? So these guys start to make their moves, and then their suppliers start to make their moves.
Right.
And the suppliers of those suppliers start to make their moves, and it trickles down.
Yeah.
So as we start to see this, and I am very positive, we are in a recession right now, very positive, that this is going to get deep and dark. And I would argue that by September, October, unless we see something from Biden, which the only thing I can think that he can do is print money, which would make it way worse.
Better. That would make it worse, right?
Yeah, way worse, but it would make it short-term less painful, right? Yeah. So inflation is because there's too much money out there, right? People have too much cash, they have too much buying power. You got to sop up that liquidity. If people start losing their jobs, you're going to go through a phase that's called deflation. So we're inflating right now.
Yeah.
We're going to deflate.
Thanks for the visual.
That's the visual, right? So you're going to deflate.
Yeah.
You're going to have your prices sink back down to what are nominal levels, normal levels.
Because no one can buy them. So like there's less people purchasing, because that's the way it works.
Right.
Less people buying them. Yeah. So more people without jobs, more people losing their homes.
That's it.
Prices have to come down in all formats.
Well, that's where, so we were talking the other day about Target and Walmart that we're saying, okay, hey, listen, we are in a position right now where we're overstocked. Target right now is putting out a return policy to not return the goods. We will just send you your money. Please keep the goods. We don't have a space for it.
Well, I've heard for years, like I had a relative that worked in Canadian Tire, and he was in returns, and he talked about how they said, for the most part, they just threw it in the dumpster because it cost them more to return it than it did to throw it in the dumpster.
Right.
Which is wild. But, you know, when you think packaging and all that stuff, it's just easier. So I can see like Target, even like not even handling it would be probably the best, right? Just don't bring it in. We'll just, because you throw it out. You can pay those throw out costs, you know?
See, I wonder if there would be like a third party opportunity there, right? Like Amazon has warehousing where if you do returns, you can go in and purchase all those returns, right?
Mm-hmm.
You just buy a crate, like a flat full of whatever the returns are. You might get
whatever it is,
get a Barbie, like who knows what you get.
Like a grab bag, like one of those grab bags that you used to get. Yeah, you bid on and get it. Yeah.
But why wouldn't somebody approach Walmart and Target and those places and say, listen, we will put a bin in your storefront, right? We'll cover the costs of it. We'll do all the packaging, we'll do all that, and we'll take 10 cents on every dollar.
That'd be interesting. Yeah, that'd be interesting.
What's the liability? Right?
It would depend on why they were being returned. Like some of it would obviously be garbage, but then there's other times that people just don't want the item anymore.
Right.
And that happens like probably 50% of the time. And they make up some sort of silly reason, and you know, these people take it. So
absolutely. Yeah.
So I don't know. That's interesting, but I think you're absolutely right. We are in a recession. We need to start thinking. I would start, if you're in a career that might be affected, you should start looking ahead. You should start looking to see if there's some place that you can transition to, because manufacturing might be a difficulty. Computers and tech could be difficult. It just depends on what's coming down the pike. Definitely Amazon won't be as strong, like, because purchasing won't be as big of a thing, right?
Right.
You're not going to be sitting at home. Well, I wouldn't be. I don't even look at Amazon anymore. I'm done with that, you know, because you scroll through Amazon and you're always find something you can buy, like you always do. It's kind of like that boredom thing that you look at, and the next thing you know, your shopping cart's full and you're buying something.
Right.
I think that'll be a thing of the past, you know. Now it'll be just if you really need something. That quick buy thing that you used to do, like even the late night home shopping networks, it's kind of like that now. That's what Amazon is. What are we seeing right here?
Well, so this is the NASDAQ, right? So we've been following this. This is an ETF that follows the NASDAQ, which is obviously, those of you following, is a major market of the United States stock market. Yep. So this is called the tech sector, right? Mm-hmm. So when we kind of zoom in here, we've watched this pattern revolve, and we're kind of channeling between this upper and lower channel. Okay. But what we're doing now is we're not getting to those highs anymore of the channel. Right. We're breaking down in this area here. Mm-hmm. So when we get an opportunity to kind of zoom in here a bit, let's bring this up to the 3 months.
Right. It's got less of a bounce.
Yeah, so you're continuing to have these lower lows. Let's take these off so that this cleans up a little bit for everybody. You're continuing to have these high. So everyone was like, "Oh man, this is it. This is it. Yeah. This is the bottom. We found the bottom." Right?
Yeah.
So this is where we are this last week. Okay.
Mm-hmm.
And
actually, I did cut you off. I was just cutting a video, and just before that big drop that you see back there, the big red line where it goes drop right down. I believe in the video that I just cut, you said, James, you have to get this video out right away because what I'm talking about here is going to be way different. Like, because right now we're going to see a kind of a skyrocket of tech and the stocks, and then it's going to drop. Right. And so you have to get this video out right away. And I said, oh yeah, for sure I will. I just made it. But anyway, it's funny that it actually is what you said in the video that I posted. It's the sky is still falling is what I titled it.
There you go.
Yeah.
So we're catching support off these trend lines, right? This is the channel, the lower bound of the channel. We've pulled up and everyone's like, oh, hey, this is it. We broke this high over here. This is, we're through the recession. Everything's going to be good, right?
Yeah.
Then we had all last week where it's just like brimstone and fire. Everyone's talking about the numbers that are coming out. The Fed comes out and says, we're looking at a 0.75% increase for the next meeting. Hang on to your hats, folks. We're not done yet, is basically what they're coming out and saying. So we rush back down and we're going to check these support levels again, right? This was a resistance. It pulled back down. Then it became support and we pushed up. Then it became, arguably, this has been support and resistance. It's channeling sideways here. And now it's broke up. So my prediction is that, as you can see, I've drawn some lines in here, right? Yeah. These lines are where I figure we're going to come up to now. Right. And we're going to pull back. I also don't think we're necessarily going to make it this long. I think we're probably going to follow more like this.
Right.
Again, the reason is that what do we have for great news right now?
Nothing.
We don't have a lot of great news. No. What we do have is a lot of fear coming down the pipe. And when these stories start to break about banks in China, and the concern is what's called contagion.
Yes.
So if you are an American investor and you bought Chinese bonds or Chinese companies and the Chinese market flounders, which right now, artificially, it's being propped up by the government.
Right.
They are not raising interest rates. They're crashing their interest rates. They are the complete opposite of us. They are still in COVID protection mode.
Right.
Well, you can't keep doing that forever. Your economy will not last.
Yeah.
This is not well done. This is not good economics. So if you are an investor and you're looking at your yields going away, your companies aren't even open to do business, you're going to get out. And you're willing to take your 30, 40, 50% loss on your money to get your money out.
And pop it into something else that probably will get you some money eventually. Yeah. The other fear I can see, and it's happened in the past, is that even though the banks are like so far away and they're in China and those are the banks that are happening it to, if that information gets out and they start saying about this widespread Chinese bank freezing, people stealing money, I could really see people in Canada and the States going, oh, well, if it's not safe there, not safe, I'm taking my money out.
Well, so here's
right? I could totally see that happening. That's what happened, like not even the same thing, but that's what happened with the toilet paper. People heard the toilet paper was gone. So they went in and bought toilet paper. Like it was mass hysteria just because of one spot probably that they ran out of toilet paper that day. That's probably how it started. And I could totally see this, that, you know, if this starts hitting the news stream and they start talking about how banks are seizing assets and stuff like that, I could see people in Canada and in the United States reacting by pulling their money out, which would cause more turmoil.
The scary thing that we're in right now in the crypto world, which is as high a speculative asset as we have in the United States and Canada, like it is as speculative as you can get. Right? It's literally a roll of the dice. You can make 7,000%, or you can lose everything you put into it. Like it's very speculative.
Right.
The crypto marketplaces are all falling apart right now. And the reason they are is that they were pegging these stable coins is what they were called. And they were pegged to the US dollar. So they had $1 in, it was equivalent to $1 and they were for trade. They wanted to have these things for buying of goods and services. They were a stable denomination. Instead of a $60,000 Bitcoin, it's $1, right?
Right.
Well, they've all crashed. things like Terra Luna, different other safe coins, stable coins, they've become unpegged and people are rushing out of them. So what you have is the exact same thing as a bank rush in the crypto world.
Right.
That's the start of it. So there's been 2 trillion with a T, $2 trillion of asset that has been wiped off the face of the earth in the crypto market. Gone. Wow. See ya. Right? There's billions and billions. I want to say the last numbers that I heard on the NASDAQ alone was like $800 billion have been erased in 3 months.
Wow.
Like this is scary shit. It's about to get worse and it's about to get scarier. So on that note, folks, have a great night.
Have a great weekend. I hope you guys enjoy yourself. I know it's only Tuesday, but you might want to get to the weekend and enjoy what you can. And
no, but seriously, it is like this is stuff that you guys want to start looking at, because if you can see things coming, then you can make good decisions.
Yeah.
And whether that's, going and getting a different like a side gig, or if doing a different designation with your employment, like creating yourself,
pulling someone into your house to rent, or even looking at other careers, just because your career might be one of those ones that might not be successful if we do go into something worse than a recession.
Yeah. No, I'm very concerned, and I think that we've got to diversify that. So, but with that said, folks, as always, we enjoy having these conversations with you and spreading a little bit of, I'm going to say, just wellness. This is wellness.
Wellness, because, like what we've talked about is negative, but we can put it in a positive light because there is money to be made.
Right, 100%. But there's also a difference between being blindsided and being prepared.
And that's the difference, right?
Yeah.
So this whole talk is actually a positive talk if you use it to learn more and to make informed choices. Absolutely. Yeah.
There you go.
I just wanted to end on positive. I just have.
I like it. That was good. The sky is falling. Good luck. No, as always, folks, I'm always trying to figure out a way to, provide information and trying to find a little bit of a way to help with people. I've got people that are asking me, when's a good time to start looking for houses again? It's not. Right now is not. And, people are asking like, when is? And I'm like, when prices fall probably another 25 to 30% at least, and the banks say, okay, we're done dropping rates. That's going to be Q4, maybe even Q1 of next year. And it's not time yet. No. There's going to be a time. You're going to have an opportunity. You're going to have that chance to go in and buy big. There's going to be sales. There's going to be people that are going to freak out over this in the next week and a half.
Because they won't be able to pay.
People warned us about when COVID was happening, that people are going to have foreclosures and all this stuff. It's coming now.
Yeah.
It just got pushed down the pipe a little bit. Right. So you've got to prepare, get your money, get liquid, get ready to go. But
so I have a question for you that just popped in my head. Say you get in a situation you can't pay for your house. So you sell your house. Yep. Would it be more beneficial to buy a smaller house that you can't afford, or more beneficial to rent until we get to the term that it's better?
Okay, so let me put this back to you. So there's going to be lots of people that do exactly that, where they're going to run out of their housing because they're saying, hey, I can't afford. So I bought $1 million home at 2.5% during COVID. I've got my family. We love our new house. It's got everything we want. Okay. Yeah. We go to renew, or the variable rate jumps up so high. Okay.
Yeah.
We can't afford this house anymore.
No.
Right. Dad loses his job. Mom loses her job. We can't afford this house anymore. Okay. We got to get out. But that house isn't worth $1 million anymore.
No.
That house is now worth $800,000, $700,000, $600,000. When do you get out? Like,
right. You're getting out with debt.
You can't afford to get out even though.
So what's the advice? That's what I'm asking. Let's throw out some advice. What would you do?
You're fucked.
What about renting?
Yeah.
Like getting people to come in and pay your mortgage.
No question.
That's probably your only option.
You need to get lean. Yeah. Right? This is what I'm saying is you need to get lean. The issue is that you shouldn't have bought the house at peak prices. No. You were the last guy off the roller coaster.
Yeah.
Right?
Yeah.
So
you didn't read the wind properly.
Right. And that's why, like, we're not trying to be, doom and gloom here, but you don't want to be the guy sitting on the last seat of the roller coaster as it falls off the cliff.
No.
Like the last guy that buys, like there is going to be some dude in Ontario that's
right now.
buy.
Yeah.
He's going to be getting a bidding war because his wife loves the kitchen, right? And he's going to overpay by $300,000. And the next day they're going to go, oh, yeah, we're seeing a 30% decline in prices.
Yeah.
And he's going to go, what?
Yeah.
What?
That and no one wants to buy the house right now.
Sorry?
That and no one wants to buy the house that everyone just bid over.
Right.
Yeah.
So you fell in love with the blinds.
Yeah.
You paid for the blinds. Now you can't get anyone to fall in love with the entire house.
Yeah. Yeah.
You're done. You're screwed. So, okay. So the advice in that situation is that you need to get so you've likely been approved through your bank or your institution at a bit of a threshold because they're doing that now. So theoretically, you are able to maintain that home if you're able to cut all your other expenses. You're going to cut the Netflix. You're going to cut the car payments. You might get out of your lease. You might get out of your expensive car payment.
Right.
If you're buying $1 million home, you're not likely driving a jalopy, right? So you're driving a nice vehicle. Well, maybe you get out of that. Maybe you go down to one vehicle. Yeah. Maybe you're cutting the sports for the kids. Maybe. You're making a lot of concessions to live in this house now, though, aren't you? Like your house poor.
Yeah.
Well, you need to figure out a way to increase your income. So if that's side gigs, if that's side hustles, if that's overtime, if that's picking up something else at work, if that's mowing the neighbor's lawn, if that's whatever, that's subsistence only though.
Yeah.
Right. There's nothing I can say for you to put your money into a market that's going to be able to keep you afloat because of the risk factor.
Right.
Right. Like there's no.
You're gambling with money that you need to pay.
Right.
You can't do that.
No. Yeah. You've got to get, and this is where, there's lots of economists, I'll call them, on YouTube that will tell you to leverage. Leverage is the greatest.
2 years ago.
Leverage is the greatest idea.
Yeah.
It's the greatest idea ever to create wealth. Right. However, when it starts costing you and you're on the wrong side of that leverage deal, you can't keep your head above water very long. So you have to figure out how to do that. So again, it's one of those things is right now you want to buy smart. You're going to be able to leverage those people that are in those situations. So when you put a deal forth and they're asking $700,000 for the house, why would you sign back at $700,000? Sign back at $5 million.
Yeah.
Right? Low ball. You don't know what these people have sitting on their plate right now.
Yeah.
So lowball the hell out of them. Let them be insulted. I love that. When I have real estate agents tell me like that's an insulting deal, I'm like, I'm a prick.
Yeah.
Like I'm not here to meet me. Your fucking friend. I don't care about these people at all. I'm here to buy their house. I will never see them again.
No.
Right?
The other thing that I think is funny is this whole psychology of like you see it on Kijiji on a smaller level that if someone throws a small bit out there, everyone gets insulted by it. Like that's an insulting thing. Well, that's how negotiation works.
Right.
You throw in your high bid, I throw in my low bid, and then we go back and forth until we come to an agreement. There's no insulting. It's called business. It's called buying and selling. Like my dad did it for years. Yep. People will walk up and go, yeah, I'll give you 25 cents for that. He's like, you're nuts. This was owned by the Prince of Spain, whatever. And they go back and forth and enjoy it because it is a fun thing. I don't know why people get insulted by that now. But with the house thing, I'll give you $500,000 for it. That shouldn't be insulting. You have an offer. Come back. If you don't like it, you don't have to take it.
Yeah. Right? Come back at $690. Like you're not going to insult me.
No.
You're not insulting me. This is where we go from this. And then I go in and I go $525. But what it is that you have real estate agents, and I have lots of friends, good friends that are real estate agents. They want to do the deal quickly.
Yes.
The back and forth, they don't want to do.
No, because that costs money.
You need to have an agent that's working for you. Because there's lots of them that do it as side hustles and side gigs and all sort of thing that are just like, I don't want to deal with this guy because I'm going to write 15 offers and we might not get anything. So I'm not going to deal with that guy. It's like, okay. But when I'm going to buy them, I'm going to buy 5.
Yeah.
Right? Like, I don't know what to tell you. Right? Like, it's mind blowing to me. Anyway,
positive note.
Yes.
let's start negotiating. And
Yeah.
yeah, so we got a lot of things coming down the pike. I got Spotify going good now. I got lots of things on there. So if you want to check out our Spotify, I encourage you to do so. Our lives are doing well. We're like booked with guests up until like mid-August, I think.
Yep.
Yeah, so keep on looking at our contact, like, share, subscribe, talk to people about it. Even if you just want to talk about it, if have a conversation because we started it, that's a beautiful thing. I love it.
Exactly. Awesome. Well, as always, folks, thank you again for checking us out. We'll have another video up tomorrow afternoon that we're going to shoot right now, actually.
Yep.
So if we look very similar, you'll know why.
Very similar. Well, we also have Oculus coming.
Oh, look at that.
Tomorrow.
Yeah, VR world. As always, folks, thank you very much. Let's try to make some money together, folks.
And let's heal our mind, body, and souls together. Hey, I got it in.